Banks across geographies have been slow to catch up with technology. As we've spoken about several times now on the show, customers, on the other hand, are exposed to new age, high quality services and are often left frustrated with the complex and poor customer service that they experience at some traditional banks. Our guest for this week's episode, Virender Bisht, interacted closely with banks throughout his career and was shocked to see the pace of technology adoption. So he started for looking for ways to disrupt the traditional approach. Virendra developed a fascination with computers and software during his mechanical engineering days, and after graduating, he continued to work at TCS on some huge transformational technology projects with both large and small clients, as you usually do at a consulting firm. And along the way, he discovered that he enjoyed working with smaller teams and eventually transitioned to the startup world. The idea to disrupt banking came when he actually led the technology vertical at Makemytrip. That's where he was introduced to his co-founder Vinay Bagri in 2015, and the duo set about to build disruptive financial products under the name Niyo. Virendra talks about his journey of building products that range from employee benefit solutions to full-fledged banking services in order to get to his overarching goal of simplifying finance with technology. And stay tuned to the end to catch some amazing unfiltered advice. Thanks so much.
Hey Virender, thanks a lot for doing this. Really looking forward to our conversation.
Yeah, pleasure having speaking to both of you, and it's my pleasure to be with you today.
So Virender, we love to start with early influences and early experiences that you've had, right from when you grew up to college and work. Could you talk us through that, as well as if there were any entrepreneurial instances or events that happened which made you think that maybe starting your own company would be something down the road?
Yeah, actually, I was as a kid, I was fairly prevailing. Quite, I would say, even though I followed, the traditional career options, but I was like, not, the typical run of the mill. I would, one could say, rebellious at times as well. And deep down, I was not very sure what I will settle into. My father influenced me to take a course in mechanical engineering, which is what I did in '96 and joined REC Kurukshetra. But then second year into college, I grew fascination for computers, just because we had this programming language called Fortran in college, and we were supposed to write some programs, and it just caught my fascination. And then from there on, I spent more time at computer labs than in my mechanical engineering, workshops and mechanical engineering labs. That said, I think the next rest couple of years, fairly fast forward, it happened, and I graduated out of REC Kurukshetra. Now it is called NIT Kurukshetra at the turn of the millennium. It was a great time. Not to say the .com bust had happened, but it was, very. It's a great time because a lot of what technology, which is shaping today's present, actually was taking its seed around that time. And a lot of the programming language, for example, Java, was finding its feet at that time and everything. And I got a lucky break in the sense that I joined TCS Mumbai. TCS Mumbai at this time actually was executing large projects for clients like GE, wherein a lot of the transformational projects were actually getting done. So in that sense, I got a little bit lucky. So with GE, I worked across 3 continents. I really saw firsthand how a large executions are done. I was probably in any typical projects, I would probably one of the 1,000 engineers working. So such was the scale of the projects. But then I saw the exactly other side of the spectrum. I was one of the 3 engineers working on the project, happened to be the lead also on that project. So I saw the full spectrum of what a small team could do, what a large team could do. And GE, in those days were executing large projects, and they had one thing in common, that all of them were big, all of them were audacious and transformational in the business areas. Mostly we were working in the areas of field force automation. But quite often we would run into, challenges or limitations of what was possible with technology at that point in time. So things like HTML, things like network speed, things like processors and available memory at client side, available memory, and again obviously AWS and equivalent cloud computing was nowhere around. So we used to operate in so much of limitations, and yet we were able to create, and the speed at which changes were taking place. That got me convinced that look, there is what if there was no such limitations, and we could execute projects, we could actually make things happen so much faster, so much better, and technology really was holding the promise of changing people's life in every sphere and execution in that sense. So that is how my first few years actually went by, and then in 2006 I came back to India. During those first 6 years, I also grew. I realized that I wasn't fitting into large teams. Probably a small team, a startup was probably where my true colors would shine through. With that thought, I came back to India. Joined a startup. And then then the journey, actually my journey with startups began in 2006. So the bunch of startups that I did through 2006 to 2010, and then I got a break with Makemytrip. At Makemytrip, I was first was actually responsible for leading the technology for their B2B vertical. But then B2C vertical is where Makemytrip was really all the action was happening. So quickly shifted into B2C side. I also was part of the team which did the first BlackBerry app. And then back in those days, we were basically seeing mobile was such a, mobile as a form factor was a possible promise. But then, nobody was really believing in that. But then when you look at the background data in the desktop sales were falling, data was about to get cheaper. And then we had basically the first iPhones actually coming around, and first Android phones that are coming around. So we started basically said, okay, let's actually start building some apps on that. So we started the apps in 2010, actually early 2011. And then, next 4 years, 30-40% of the business actually was coming through the mobile platforms. Such was a rapid pace of, I would say, transformation and changeover. I was also, at Makemytrip, I also again got lucky that I was introduced to the products side of things, and then I led the product team for the payment gateways. So Makemytrip, had at Makemytrip we had all the relevant technology platforms and continue to till date to basically play like a payment gateway to multiple lines of businesses. We never deal with external payment gateways, etc. So that was my time when I started interacting with the banks, and I was like shocked to the extent that how banking system is such I would say the pace of adoption of tech was more or less forced. And then they had I really felt that there was no pressing need coming from the bank side that we need to innovate and continue innovation, because consumer trends are changing. The way banks consumers will consume banking is going to change. So that was actually not moving at the desired pace. And when we look at a Makemytrip kind of setup, when we were all technology first company, happened to be doing in travel agency business, banking were not there. They were all people who were maybe bankers first. Happened to be leveraging technology. Completely changes the perspective. So we thought, okay, look, if there is an opportunity that we can get, in which I would like to come to banking, disrupt banking, and really make banking more simpler, safer for masses. I would really want to go for that opportunity. So that opportunity came through in 2015. Is when I met Vinay, my current partner at Niyo. That meeting was facilitated by Prime Ventures. And then Vinay is mostly been from the business side. I had ideas on the technology and the product side. We decided to basically come together. Prime was very kind enough to seed our company, and the journey with Niyo started around that phase. So yeah, quite a long winding journey. 15 years it took me to realize that what my true calling was. But I could see that, I would say early evidence of what I would be doing back in 2002, 2003 itself. But yeah, it took me a long while, to basically finally, have the courage to leap into what I'm doing today.
With that, it's a good segue into our topic for this episode. First of all, do you think neobanks in India are trying to emulate models that worked in Europe, or is it different? And what are some of the key differences?
Yeah, if you look at a macro level, yes, it's a consumer trend. Consumers right across the geographies, continents, they have expressed their frustration with the incumbent players. So they're looking for, and bear in mind that the same consumer experiences a completely different class of product and service in any other area, right? So, for example, in today's, in India, if you look at it, when the same customer basically looks at a Makemytrip app or Zomato app, and then looks at, let's say, any other bank's app where he finds actually trouble logging in, just trivial, as simple as like checking the balance, then that the person is frustrated. So that is basically the moot point in the case, for the existing existence, why this thing needs to change. Now, fintech companies happen to be basically doing that, executing that today, and that is actually happening right across the globe. So what is happening is that if you look at all the way from Far East, like cacao in South Korea, for example, right? And then you look at span westwards, you look at what is happening in Hong Kong and Singapore, of course, what is happening in India, what has happened in Russia, what has happened on the Western, the Monzos, the revolutes, and all the way to US. It is the trend is led by consumers. The way consumer access and consume banking, that is what is changing. Right. So that's a trend that is basically all across the globe, and so that is from a trend perspective, one could say that it is the same thing that will play out in India. But of course, India is nuanced. It's nuanced in the sense that probably at an infrastructure layer, we are one of the most advanced, as a country, as far as any infrastructure layer products are concerned. We have the fastest interbank transfer. We have the at a consumer level, we have one of the best payment products. It was the IMPS to begin with, and it was now UPI is there. We actually were one of the first countries to adopt 2FA back in 2010. And then from a consumer side, if you look at the chip and PIN, and then you look at now the way mandates are going. So we are in that sense, from a infrastructure layer, we are far ahead of anyone else out there, right? But what is happening is that alone infrastructure layer, things cannot change. What you need is a suitable access platform, a form factor to really give the complete advantage of what is possible with the technology in the hand and put it in the hands of consumer. And this is where the role of neobanks and the fintech companies like us actually comes to play. Other key differentiator from the way the role of a fintech or a neobank in India versus the role of any other fintech or neobank out in, let's say, in Western Europe, is that they have Western companies actually have managed to figure out a license part of things. So they have a digital license in some countries, and wherever there is not, they are very happy working with a partner bank. In India, we don't actually have a digital bank license. So what it means is that for any product or service, the fintech players will partner with the existing bank with the license, and then both the bank and the fintech will work together on the product, and then that product is basically then is marketed to the product, and so on and so forth. So these are the, I can say, two key differences. We have an infrastructure advantage, but as yet we don't have a digital bank license. So the partners will need to work with the banks.
That's interesting. I mean, so we have an advantage on the infrastructure side, but also a disadvantage on the regulatory framework side when it comes to the global perspective.
Yeah,
but
I would say I wouldn't call it a disadvantage, but it's just that yeah, of course, having a digital bank license would probably be that much easier. But I think what is happening is that in India, at least now we have so many. The banks are also rising to the opportunity. a fintech company like us can make any bank that works with us competitive. So when we work with the like of Equitas Bank, when we work with the like of SBM, what happens is that the products that we create out there, they are equal and more competitive than a product from any other bank out there. So in that sense, there are the banks are now also, I would say, aware of this opportunity, and why would they, or why should they actually, partner with the fintech company? And then, at the end of the day, it's a win-win for everyone.
Oh, because that's one of the challenges, and actually one of the questions I had. Traditional banks kind of realizing that there's an opportunity. And you mentioned that there's this consumer layer that's essentially missing. Do you think banks can also build that layer, or are they just not able to do that?
I would say, I would say, I think the start of a great consumer layer is just a start. It's a table stakes, if you ask me. But if I just look everything from a better mobile app, I would or anyone would basically be straight jacket in their thinking. See, look, what is happening is that when you start working in the consumer layer, right, you don't look yourself as a vertical player. And over time, then you'd see, okay, how can we embed the banking or finance into whatever else the consumers are doing? So, and that is possible because, when as a fintech, you just want to innovate at the customer's layer. If I were to say, look, just the basic, banking, like, see the balance, see the transaction, transfer funds in and out, if that was the banking needs, this is like barely scratching the surface. It's like 10% of what is possible and what should be done right. And so in that sense, it table stakes. When you, by looking at the customers spend trends, if you can tell the customer that, look, you are going over budget, you could help them navigate, help them save funds for a rainy day. That is where I think a lot of innovation is still there to be done, and a lot of new banks are actually set up on that promise that they will help the customers to anchor themselves in the turbulent financial world which is out there. So in that sense, which is consumer actually have been doing this, more or less offline or by finding some other means. It's just that their banker was not the preferred product for that, which is where I think someone like Niyo comes in. And it's just basically, I would say that it's beyond basic banking is what where our vision is.
That's really interesting. So, I mean, it's almost like a macro trend of changing consumer preferences made neobanks relevant. And now neobanks are starting to change consumer behavior as well. It's almost like
if you look, for example, we have been experimenting with this product called Invest the Change. It's in early beta now. Some of the customers have started, getting that product. And the product really is that as you continue spending, from your debit card or UPI, basically use your bank account for your, spending. We would basically keep collecting that change. And the change, let's say you had a coffee for 80 rupees, we'll collect 20 rupees change and then invest it somewhere else. So that's the idea. So the consumer feels that, yeah, this is good. Somebody who takes a liking for such a product, then they start using your bank account more frequently than, what they would do. Right. So, and I mean, things like this is possible just because you are innovating and restricting yourself to innovation at the consumer space.
No, I mean, that to me, that's a really interesting. Personally, I feel like you can make a lot more money by saving more rather than making 1% extra on your investment. So I think changing behaviors is crucial and a big role that neobanks are playing. But I wanted to ask about your evolution specifically. I believe you guys started off as a company for employee benefits. And then evolved to this product. So can you walk us through that journey, please?
So when we started, in 2015, I recall that Sanjay Swami from Prime, and I, even before we started the company, we actually went to Yes Bank. This was in October of 2015, where we pitched this idea that we want to do something, it was not the employee benefits idea. So we spoke about an idea working with Yes Bank. Yes Bank was one of the progressive banks at that time. They still are, and we thought they would probably be, the right people who will give us audience, understand, hear what we had in mind, and hopefully will support us. They did support us, except that, the product that we had in mind, required some more construct, and this was not possible. So we ended up saying, look, we always wanted to work on with the employees side of things. the salaried employees and eventually banking, but it was not possible at that time. So we said, okay, what's the best possible surrogate, if you will, to work with this customer segment? And that was the germination of, and then we started looking at, effectively what was plan B, look at, how the Sodexos of the world were operating, how, the tax benefits were getting consumed by the employees in corporates. And we basically launched a digital version of that product. That was the first product of, employee benefits. Now, when the demonetization happened, then what happened is, before actually I'll come to that point. One of the other things that we were doing very differently, we always had a platform approach of building things. We were always, of the view that, look, if we create platform capability, the use cases can differ. And, if we have a solid platform at the back, we would, if opportunity presents, we should be able to create a layer of application on top of it and address a completely different requirement. And then, we almost got the timing perfect when demonetization happened. So at the time of demonetization, actually two things happened. One thing that happened was that, obviously the currency went out of circulation overnight. And at the same time, the employees who were, this blue collar segment, who were actually getting their salaries mostly via cash, the government basically said, look, you need to pay your employee salaries through digital medium, so that their, let's say, employee provident fund, employee state insurance, the health insurance part of it, that could get coverage, and these people could actually over time build a financial footprint. So just to expand that, the banking to the low skilled blue collar worker base, government basically came up with that mandate. Now that certainly created a lot of input demand for us. People wanted to use our product just to remit salaries to their employees. And we then quickly said, okay, look, this is not what we are doing. We are actually quite happy executing the employee benefit side of it. But just because we said, okay, let's not say no here. Let us actually have this product out. We will limit the demand, and we will not serve more than a few hundred employees or few hundred customers every month. But then few hundred quickly became few thousands, and before we know it, we were like doing 5,000 new cards a month, right? And then it was just basically going on. Every month we will develop the numbers. And then one day, what happened in one of the hackathons, company hackathons that we create and that we have internally, one of the employees who is now leading engineering for this vertical, he showcased the app to us and said, look, anyways, we are working on this blue collar segment, and we don't have a right app for it, for the customer segment. And this is so what Niyo stands for. We all talk about, better banking, very customized to the needs of the individual. Whereas, we are actually asking our customers, the blue collar employees, to use the app, which is meant for a white collar employee. So it is not done. So he created basically an app, and showcased to us that probably this is a better way to do it. And that app was called Niyo Bharat. So eventually, then we basically transformed and we created a full-fledged business out of it. So that business is called Niyo Bharat business. It's essentially the salary account, backed with the open loop prepaid instrument for the blue collar workforce. It is the app is called Niyo Bharat. One could download it from the Play Store and start receiving salaries in this account. So that was the second product that we did. And then also the third product that we did actually was again an offshoot of what we were doing in on the employee benefits product. It so happened that some of the corporate employees who were using our employee benefits card, they were traveling abroad, and when they were traveling abroad, they started using our instrument. So our employee benefits card always had this feature that, typically in your meal card, you could receive basically about 2,200 rupees from your employer every month, which could be used in your canteen, which is fine. But people would use that money, in the first 15 days, 10 days on, but they still need to eat food at the canteen. So what they would do, so people will, employees will basically park their own money in that account and then use that, right? So that is how it will happen. So now, when some of the employees started using the product, we started seeing that, look, and then they gave us a feedback Look, this card actually just works great. I was to Singapore and I use your product. It is so fast, so seamless. I can basically come back to the mobile app and see, how much of money I have spent. And I can, if I'm running out of cash, I can immediately load money, and it's a great product. And otherwise I would be using, exchanging currency at the airport and stuff like that, which is not done. So we thought, okay, look, this is a great opportunity. And anyways, outbound travel from India, be it the purpose of education, be it for the purpose of travel or business, personal or tourism, actually was, just going through. So we thought, okay, maybe there is an opportunity for that. So that created opportunity for the global card business. So that was the third product, if you will, that we created. And finally, we came to this Niyo X product, which is a more general banking product, full-fledged savings account product in partnership with the IDFC to first, and then Equitas, and now SBM. So these are the three banks we have, we have done the partnership so far. So that is how, the long journey of how we ended up creating multiple products. I would think as founders, we were not very rigid about our thought process. We thought, okay, let's have our ears and eyes to the ground and then execute it. And it's a lot of, we picked up signals and then, launched these products, which we thought were relevant. And quite lucky that, 2-3 products out of the 4 products that we have created really have caught, attracted the customer base. On Niyo Bharat, we have about 7,000 companies that work with us, and till date we have about 2 million plus employee accounts we have done. There are about 500,000 users active on that account and on the product at a given time. Niyo X, which we launched earlier in this March, we have about 750,000 accounts on that side. And so these are the 2 flagship products that we have. Travel, as you would imagine, is right now very subdued, but as and when it comes back, and I think we have a great product at that. So these are the so far the journey that we have been able to do.
Amazing. Thank you for sharing. I think that's summed it up really well. Yeah. So just wanted to ask the final question that we ask all our guests. What's one piece of unfiltered feedback that you've received in your journey as an entrepreneur that's really stayed with you?
Yeah. Okay. So I think my one sentence advice would be that a lot of what is written out there in textbooks actually turns out to be true. And and all of us basically probably early in our careers read a lot of, and people particularly who are thinking about delving into the world of entrepreneurship, we go through this, okay, what is written out there, what people experiences have been, yet we all of that look at it from a point of view of, okay, well, this is there out in the books, so this is general gyan. I don't know how much of it is actually applicable, practical. So 2-3 things that actually, I also, had a different point of view, but then eventually realized that, if you have to scale out, if you have to build large companies and etc., there are 2-3 things that you could do. So my, advice would be, 2-3 things. Learn from other people's experiences. Mistakes could be fatal to the extent of survival and existence of your company. So therefore, always, look out for advice, either from books or from material out there, either from well-wishers, your advisors. So that's one thing. Keep yourself well informed at all times. So that's one. 2, I think one, it would really help if you know what your strengths are. More importantly, what you also know what your weaknesses are. And then, when you are actually starting out, always, find a partner, a co-founder who complements you in this, in those ways. Eventually, if both of you founders are actually, more or less, 80% overlap, it turns out that there will be a lot of, areas which will be blind spots to both of you. So in that sense, between 2-3 founders and the founding team, we should try and cover as much as possible. So if one is good with people, one is good at business contracting, one is good in products, one is good in technology, one is good in general, with the general business accounting and stuff like that. It will be basically a good mixture. So try to find complementary skills, amongst the startup, the founders, the founding team. That should be really one of the advices out there. Other is that my advice would be that, experiment a lot, because turns out that when you scale out, the experiment in the time of, cost of doing experiments and ability to do experiments actually, diminishes very fast. So be always mindful of that, once you build out products, always leave out scope for experimentation. If you actually build products which allows for, let's say, a very trivial example, if you are creating your homepage and if you leave out a space for a banner, and that banner can be customized from backend, it's a great actually asset to have, because then you can use that to experiment a lot with the kind of banner, what is working, what is not working. So suddenly, 25% of your homepage real estate is dynamic, which is a great thing to have. But if you have not thought about it, and then, then you will end up basically releasing a new version of the app, a new feature, etc., etc. So always be open, because more often than not, what the original idea that you work with actually will require a lot of revisions before you finally arrive at what is scaling. So eventually, so your job as a founding team at times is to find out that one idea that scales, in the shortest span of time, and that is a challenge. And you will not run out of funds. You will not run out of ideas. You will definitely run out of times. So time is the one unit that you want to optimize on. That would be my advice to the founders out there.
Understand. Awesome. Thank you for sharing. Really enjoyed this conversation. Keep listening to our listeners. Thanks a lot for your time.
Yeah, thank you, everyone. Thank you for having me today.